Lord's sake, as usual, I'm going to be taking you through this tutorial, and it is going to be so amazing, and at the end of it you'll be able to figure out your own signals, and you'll be able to know why do we sell, why do we choose to buy, because you don't need to always follow your coach or mentor. Now if your mentor is out of the market, what are you going to do? Your signal provider is not available. Does it mean you won't trade? So I'm going to be showing you why do we choose to sell or buy. Then I'll be talking about pending orders, where I'll talk about to buy stop, buy limit, sell stop, sell limit. I'll be talking about all those things. Then I'll explain you about what we call double top, double bottom. So what we need to do is to look for our MT5. I prefer using MT5 because for late it is modified. It has a lot of features which are not on MT4, so I prefer using MT5. So the first thing, you're going to go to our chart and first look at the candles. These are candlesticks. Candlesticks creates what we call OHLC. O means open, H means highs, then low means lows, and then C means close. For example, our chart is here, and the these red candles, it means market is bearish or market is moving down. Then you have green candles, which represents bullish market or market moving up. So remember, as I told you, OHLC, any candle, for example, if this candle was moving up, this green candle, market was bullish. So here you can see sellers came in and pushed the market up this end. Then after this candle closed from here, bearish candle was opened here. This is the opening point here. Then what is the high of this candle? The high of this candle, it is this one. High of this candle, it is this one. Then its lows, it is this one. So this is the body. This week, this sharp line is called the wick or the candle, wick or the shadow. Most of the candles you're going to see when they are making these shadows or these wicks. What does the wick mean on the chart? For example, let me give you an example here. I'm on a chart of USD chief, USD dollar against Switzerland, France, the flank. Then these are wicks here. This means when you see this is this candle, it has a longer wick. This candle has a longer wick. This candle has a longer wick. This means market was trying to move down to be bearish, but still buyers kept on resisting the market. So when this candle opened here, it first moved up, buying. It first moved up. So it means here, after this candle was opened, buyers came in and pushed the market up and pushed this market up this end. Now after that, then sellers came in and pushed this market up to this end. After pushing this market up to this end, what happened? Then buyers came in again and pushed the market up this point, so where this candle was closed. So this is the low of this candle. This is the high. Bearish candle, its lows is above, then its highs is below. Then bull candle, bullish candle, its highs, it is above, then its lows, it is below. The thing may confuse you, but just need to relax. You learn them later, but still they are very explanatory. They are self-explanatory. Just as I told you, highs of bullish candle, highs of bullish candle are always at the top, then lows at the bottom, then highs of bearish candle are below, then lows of bearish candle always appear at the top. Now let's come here. This means buyers coming in, pushing the market up this end. Buyers came in and pushed the market up this end. Buyers came in and pushed this market up this end. So it means this price is trying to reject all the prices of here. So buyers are still in the control. However much market is trying to move down, but it means buyers in control. So that was something I wanted to explain you. Then there's another thing I want to talk about. There are people who love to use clear charts like this one, which have white background. So what you have to do, you just tap in the screen anywhere, then you are going to see this. Go to settings, then come here, adjust the colors. Now this is what we call grind. Mine is white, but sometimes there are some chart you're going to find when the grind is black. Now if I put in black and I go back at my chart, you are going to see all these squares, but some people don't love these squares to see them. So if we want to change your chart, you just click, go to settings, you just click here, go to settings, then you go to colors. You have to change this to white, to any color you want, but for me I prefer white. Then there's another thing, you want to change this color. Blue candle, you can choose your blue candle to be green, bearish candle to be red, as my settings are. So you can already choose these colors from here. Some people don't know where they can find these settings. So there are a lot of settings here. For example, you want to ask price, buy the price, volume. You can always make all those edits from here. Then there's this for background. My background is black. I can choose it to blue. Then if I choose to become blue, I'll click here. You're going to find when my chart is now having blue here. So you can change anytime you want and put what you want there. Then there's something I want to first explain to you here. It's about pending orders. How do we set pending orders? Let me first go to these orders which are open. It is a weekend, market is not moving, so I want to place those orders, but I want to show you how do we place like pending orders. Pending orders, these are orders you set in the market. They are temporary orders you can set in the market, so that when the market reaches on that particular price, it will execute automatically. But if we want to sell, if we want to enter in the market, you just come here, then you just buy. But here market can't open because it is closed, or you sell, depending on what the market is telling you. Now here, if we want to, here you'll be doing what you call market execution. These orders are going to open automatically if you want to open. So now what you're going to do here is to click here. You're going to click here, then you're going to see all these orders. Now, how do you place pending orders? You're going to select buy limit. Let's first set up. Let's first look at buy limit. Now, buy limit. We need to first go on the chart and we'll see how can we set our buy limit. Remember, I'm changing my time frames. This is a 1 minute time frame. Let me try to use a 30 minute. If I use 30 minute, still this chart, it is very down. I want to use buy limit. I want to use a chart which is at least, let me look for like a Euro USD. I will show you what I want, and then we go to the chart. Then after going to the chart, let us use 1 minute candle and see. Okay, this is 1 minute candle. Let me set to 5 minute candle. Yes, Let me use this one. Let me use 30-minute candle. Now, how do we set buy limit orders? In case we want to set a buy limit, what do we consider? A buy limit, it means you want to set your order below. It will be temporarily. It will be temporary, but you want to say, for example, this is a support. We have here some support. It is very weak because we are using 30-minute candle. You can say, let's bring our line here. If you watched the previous tutorials I posted on YouTube, I trust you know where I'm getting this feature, this horizontal line and vertical line. So now we are going to put our line here. Consider the horizontal line. This is the horizontal line. Now you see where this point is. It means if you want to set your your buy limit, you're going to say maybe when the market comes back and touch this point, still it is going to move up again. So what you do, you're going to take this price 1.01614. If you cannot remember it, you can write it anywhere. So you're going to choose this price 1.01614. Now, after taking that price, you go back, you come here and say, I'm going to buy. Then you select here, buy limit. When you select buy limit here, you are going to come here. Most of the time, always consider lot size you are going to use, depending on the capital. Lot size, this is the number of units you are willing to buy. So depending on your capital, always consider lot size. So I'm going to use 0.01. That's the micro lot size, the lowest lot size on my broker. Now, the other price, we are going to place it here. The other price, you remember it, come here and say 1. We are going to delete all those zeros. Then you press 1.01 1.01614. So this will be the price. Now, after setting your price, you are going to see here the word place. You are going to see the word place here. You can see. So if you place here, that order is going to go exactly on the other point here. I cannot place it because market is closed. So your order is going to come here. Now you are going to choose. Now after you have placed your order, you are going to see a line. That order is not active. But in case market moves from this side and reaches here, this order will be opened automatically. After opening, in case market starts moving up, you'll be in a profits. Now, how do we set order? How do we set stop loss? Remember, on opening order, we have to set a stop loss. You are going to come here. Remember, our price is here, entry price is here. Now, if we want to set a stop loss, this is a good zone to place a stop loss. A good zone to set a stop loss. I'm going to tell you why. We can put our stop loss here because our price is here, entry is here. We can set our stop loss here, all here, but the good zone is here. Why the good zone is here? We are avoiding this price rejection, this candle. You can see this longer wick, longer shadow of this bearish candle. It means sometimes market can move and passes through after opening, after executing your order, it started dropping. But sometimes you find market is going to come and respect this line. After reaching at this point, it is going to start moving up. Sometimes market always follow principles when it is moving. Now here, if market happens to touch in this line, you're going to find yourself, your stop loss is being eaten and the market is going to go straight to your direction after hitting your stop loss. Now, to avoid what we call stop loss hitting, you are going to place your stop loss under this point. So sometimes market will come and reach here, then it moves up. This is how we set a stop loss order. Now let's try to check on 4 time frame. Now, 4 time frame, we can put our if we were setting a stop loss, never set a stop loss now for buy in this week, this shadow, because sometimes the market will come and touch this point, then it moves up, following what we call double bottom. Let me show you here what we call double bottom. If I can find a good double bottom, I will show you. Here now here it is just creating what you call lows, low highs, low high, low. It is called the low highs, then it is called lows and highs. But here we cannot find a good bottom, double bottom. Let me check on daily candle. On daily candle, let me show you a double bottom here. I can see a double bottom is this one. It is like this one. This is a double bottom, this point and this point. So this is the double bottom. When you see this and this is the double bottom. And most of the time when you see a double bottom, we always buy. At a double bottom, we buy. Double top, we sell. So this is the double bottom. Now it means if we find that market has the previous price touched this point and is again touching it, what you are going to do, it is to automatically buy. But first, most of the time when you are buying, you have to set your TP. For example, if you buy from your entries are here, then you have to set your stop loss around here on this point. Why do we set on this point? Because that's why you can see market when it reached here, it started dropping. Following this, now it means if you had set your stop loss here, you're going to find when the market is dropping after taking your stop loss. In this case, you don't need to set your stop loss up to this side, because you can see this resistance here. It is a support, but when you are looking at this support here, I mean this double bottom, you're going to consider it as resistance. So what you do, you press your TP here. Your TP, you can always put it in these weeks, because most of the time market is going to touch them. After touching them, your TP will close automatically with profits. Then let me go on the 30-minute candle I was explaining here. So I showed you how do you set a stop loss and you avoid your stop loss to be eaten and market goes direct to your direction. It hurts. So this is how you can always avoid it. When we check it to 1 minute candle, I mean 1 hour, still, if for example your entry point is here, you entered from here after seeing that market was trying to be bearish, but selling power is too weak. That's why you can see these smaller candles of bearish. They are very small. The moment you see smaller candles very weak, they are small, moving down, it means sellers are not having power to drop. That's why you can see market reached here and started moving up. Now after entering from here, you're going to don't put your stop loss here, put your stop loss on this level. It means market can come here and touch this point, double bottom, then it will start moving up again. And most of the time, if it breaks here, sometimes it can break and go to hit your stop loss. Respect that stop loss and hit it, because after breaking here, it will keep on selling. Up to, you can find it selling up to from this point. It's going to sell. It can touch this point and again touch this point and again touch this point. Now if you remove your stop loss, you are trading at opening stop loss, you are going to find yourself the account is going. So always respect stop loss. Another thing I want to show you, it is a buy stop. I want to show you a buy stop. How do we set a buy stop? We are going to come here and choose what we call buy stop. Now, before we place a buy stop, we are going to go back to the chart and find a position where you can place a buy stop. Now, for example, our current price is here. Well, let's not consider this. Our current price is here. When you see that our current price is here, we are going to say that when the market reaches here, depending on your analysis, when the market reaches here, let me show you. You can say when the market reaches here, it means you expect this market to keep on buying, So what you are going to do, you are going to set what you call a buy stop. It means when the price reaches on this point, your order will be executed automatically, and when it started buying, you will be in profits. It means buy stop are supposed to be above. Then buy limit are always below. Then sell stop are always below, and sell stop and sell limit are always above. I will not explain all this because they are all, everything's opposite to the other. Now another thing I want to talk about, it is about maybe someone want to see me setting a buy limit. If you want to set, you just use the same principle, the same tutorial I showed you when I was setting our stop loss limit, our buy limit. So you just choose this price. This is we choose 0.98663. Remember, we want to choose a buy stop so that when the market reaches here, it will execute our position, then it keeps on buying. We are going to be in profits. Now, if in case you set here your buy limit, your buy stop, you are going to set your stop loss here, below here. Don't set your stop loss in this week. Just set your stop loss below it, because sometimes it can come back and reach here. Then it starts buying again, because sometimes there is what we call collection. Market can do what we call collection or pull back. It can come back to collect the move, so that it can move. It can go directly to its current direction. Now, to avoid your stop loss to be eaten, you are going to set your stop loss under here. This is how we set a stop loss. But TP for TP, you can set, for example, let me show you here. For example, you entered from here, you entered your buy. Where do you put your stop loss? You are going to put your stop loss below these slides. This week, never place your stop loss in these weeks. Sometimes market can eat your stop loss and go to your direction. It will hurt you. So avoid placing your stop loss in these weeks. But most of the time you have to consider the risk management. Then if we want to set our TP, if we entered from here, we can say now these are weeks. These are weeks here. We can say our TP is going to be here, our first target. Then our second target can be here. Then our side target can be here, like that. How do we find the target of TP? We have to consider the previous price movement. So we just we entered from here. I'm showing you. For example, your market was moving down. Then when it reached here, we see it is now a double bottom. It again touched this point. You can see this is a double bottom. It touched this point again. After touching this point, now we are going to enter from here after entering from here, our first point of TP is going to be here, following the previous price action, because we expect when the market again reaches here, it can create something like this. We expect it. That's why you can put your first target here in case you are a day trader or a scalper. But if you are like you buy and hold, you can set your stop loss, your TP here, because we are targeting this point, so that when the market reaches here, it is going to create the same thing. You can see it is the same thing. So market follows the principle when it is moving. Now I showed you what you call double bottom, double top. Let's go back to check on how we can set our buy stop, our sell stop. We are setting our sell stop. Now we are going to set our sell stop. We come here, we set our price. You have to find out the price you want to sell. For example, you can say market here is moving up, then you expect that however much is moving up, but if it starts selling, when it reaches at this price, it is going to start it is going to continue selling until it touches this level. So it means you are going to set your price. This will be your price. So after you go set sell stop, we are going to put what we call, let's check on this price. I didn't calculate. So the price is here. We wrote our price already, so we are going to set sell stop, then you put our price. Remember, when you are selling, your sell stop price have to be below. So our price is 0.98663. So this is the word place. Then you just press. Because market is closed, these orders will not go. But I trust you have seen what we consider when we are pressing stop loss, when you are setting stop loss, where do we put it, TP, and what you call double bottom. Now I want to show you something like a double top here. What is a double top? Remember, market, when you see all these points, double bottom, it means you are going to start selling. Double top, you are going to start buying. Double top, you start selling. Double bottom, you start buying. Let me check on like a gold. This is gold. Let me check on its chart. Now you can see this is the first point. It touched this point and it moved up. It again came back and touched this point. So you can see this is now a double bottom from here up to this point. This is a double bottom. That's why you can see it is selling again. Then a third bottom. Most of the time, a third bottom is always powerful. It is like a candlesticks. These time frames, we have what we call strong time frames and weak time frames. Weak time frames will always give us weak signals. When we are targeting smaller movement like scalpers, they normally use 1 minute, 5 minutes to 15. Those are scalpers. But if we are targeting big move on the market, you have to use 1 hour candle. Then you have to use what you call 4 hour candle or daily time frame, so that you can target a very big move. Now, because you can see we have what you call 4 hour time frame. Now you can see the third bottom here, the third point. It when touched here, it never exceeded. That's why I always tell you, when you see a double bottom, you have to start buying. But however much market technically will be correct, you have to use a stop loss. Never forget a stop loss. Now that's why you can see market started selling up to this end. So let's check on daily candle. On daily candle, you can see on daily candle we are having still these bottoms. You can see this is a point, this point, and this point, double bottom. So market is not exceeding this point. When you see that the market reached here and moved up, and again when it comes back, just expect the power, all factors which made this market to stop here, they are going to cause it at the same time. As I told you in the previous video I posted, history repeats itself. History repeats itself. So this is history. It's happened last week, and it's happening today and again. So that's why you can see a big move on the market. Market is moving up. Now there are people like those people who can hold for weeks and months. Someone entered from here and is holding his trades up to this end. Now for me, if I chose to buy from here, you can see I press these orders. I can set my TP here. This is the target I'm going to target. I can target this point that at least market is going. The next move of the market, it will touch this point. If in case it moves back, I can set my stop loss here. Let me show you. I can set my stop loss here. Why? I'm looking at this candle at this point, that at least market when it reached here, it will move and touch this point. I can choose to exit if it comes back to my direction, because I may see maybe if after reaching here, I don't know what is going to happen. If it continues buying, I'll expect this target of TP. This. So this is how we set what we call TP. Now I'm going to show you what we call a support. Where do we find the support? Like where do we find the support level, a resistance? What is a resistance and what is a support? A support, it is a point or it is a point or a level where sellers are no longer having control. There where sellers lose control and then buyers come in. When you find, like you can see here, market was moving down, bearish, was moving from here up to here. Let me show you an example here. Market was selling here, bearish candle. When it reached here, it started ranging. This is a ranging market. This is a downtrend. Market is moving very straight, selling seriously. Now when you see here, it is creating what you call a support. When the market is dropping and started stopping, at that point we call it a support. Now I want to show what you call support becomes resistance. There is sometimes, I told you most of the time, however much you are correct, market can do something you don't expect any time. So that's why you have to consider, you have to use your stop loss. Now look at this point. Market was moving down. When it reached here, it created a strong support. This is a 4-hour time frame. It created a support. This support, it is very strong because it is of a big time frame. So sometimes there are features we normally use. We come here. No, I still need this time frame. So I was explaining you on this point. So it created what you call, let me show you here something. I'm bringing this square to press it here. So you can see this is what you call a support. After creating this support, now here any trader is going to expect the market to move up because it's a support. Technically you are correct, but the market can't do anything. That's why you can see instead the market of moving up, it break this zone and started selling again. So this is what we call support becoming resistance. We are expecting market to move up, but it started selling immediately. Now if, for example, if you see this last candle, like the last candle here, there's someone, let me remove this. Still coming here. Let me remove this. I want to remove this square I just put here. I want to remove it. So now, for example, you entered your trade. When you saw that market has started moving up, you choose to enter here. Then the market is moving down again. So you have to come here and set your stop loss below here. If this candle hit your stop loss, just accept, admit it, and wait for another setup so that you can recover. Don't modify your stop loss. Or you can say maybe because it is a support, someone will put just your stop loss here. When you see that your stop loss is being eaten, just relax, leave the market, because market is doing something which is abnormal. So that's why this is what we call support becoming resistance. Now, the real support, the good support is here. Good support is here. You can see still, however much it started selling. When it reached here, it started creating a support. These points, we consider them as a support, where selling power reduced. When it reached here, selling power started reducing and started selling. Now, what do I want to show you here? When it reached here, it made what we call a correction. This is a correction, pullback. You can call it a pullback or a correction. After correcting here, it started moving again. After moving, it created a resistance, because yet it has been buying. When it reached here, it created a resistance. Now, most of the time when we see resistance level, we are going to sell. But most of the time when you are doing anything in the market, you use what we call stop loss limit orders. Sometimes you can see this point and see now this is the resistance. Market buyers are no longer in control, they are losing control, so it is time to sell. Someone will come here and press their sell order. After putting your sell order, market here did what we call a continuation to its direction. So this means a resistance is becoming a support. Resistance became a support and the market started selling again. So this is what we call, I explain what we call resistance becoming support and support becoming resistance. But most of the time, technically, market will always follow the instructions. That's why you can see here, after moving for a longer time, it created here what you call, this is another, this is a resistance. This is a resistance. So if you find this, you can always sell. But most of the time, before we choose to buy or sell, because we have seen what we call a resistance or a support, we can use what we call indicators. Which indicators do we normally use? We normally use what we call, when you are looking for selling, when we wanted to find out if the market has done what you call oversold or overbought, we use a candle, which is we use an indicator called the relative strength index. How do you place that? Relative strength index? You tap anywhere in the screen, you click on this point, this F. Still it is here, it is the same future. Now when we click here, we are going to click here on add, F add. We are going to look for movie relative strength index. It is here. We want to determine whether market have sold or bought. Now we are going to come here. Sometimes we can set period. We can choose the period and set 200 or 50 or 100. But we want to get a big move. We want to see a period that this market have been buying or selling, so that we can choose to find a good buying point and a good selling point. Now you have to make sure this always make sure that where you're going to place relative strength index, the chart, the background is white here. So what we're going to do, then there's what we call levels. Levels, most of the time, when the market reaches on 70 point, this 70 level, I will show you in the chart, it is overbought. When it reaches at 30, it is oversold. So, but for me, I love accurate signals. I normally consider 90. Then below, I consider 10. So we are going to choose this point, 90 and 10. Then you come back. Then you click here on done. When you click on done, so you are seeing our levels are here. This is the line. Our first line is here showing 90 and 10. Now what next? What next do we do? Because we want to determine if market have done what we call sell, we are going to add what we call market, that is moving average converging divergence. That indicator we also have to indicate it. This is a trend. This candle, it indicates the momentum that a market or a security or a currency, we can see it determine the momentum of the market. For example, you can be able to determine momentum of selling, then momentum of buyers. Now you're going to come back here. We click here. After clicking here, we are going to add on top of the relative strength index. Don't click here to open another chart. You are going to click here because we want to determine however much we want to see the time frame. We want to see overbought level and the oversold level. Then you have to add to put what you call marked on top of relative strength index. Then when you click here, we come and look for marked. It is already here. So when it is here, you can change these colors on the color you want, but most of the time consider signal color and main color. So you make sure you determine them when you are on the chart. Then you have to come here, and you may not choose to set anything. Don't change anything here. You can leave them. Then you come back and click done. Then when you come back here, when you come on our chart, you can see now we have added what you call marked. Now we are seeing what you call, we are determining the momentum of bulls and bears. Now after that, we are going to add another indicator called moving average. Moving average, it determines the longer term support and longer term resistance level and overall trends. So this moving average indicator, it helps us to determine the overall trends. So most of the time, you come here, you click here, then you are going to add still on top of all these indicators. You click here, then you are going to find our moving average here. We have a lot of indicators here, but I'm showing you most used indicators in our case, what I'm trying to teach you. So we are going to come here, change this period, put like a 50, 100. I prefer using 200 because I want to determine longer term. The moment when you use the 50, that's a short term. 100 still medium. Then 200, we are targeting longer move. So you can change here. This line is going to be you are going to see this line when it is red on our time frame. Then don't change here. You can leave this when it is an exponential. Keep it. Then leave it to stay open. Keep it to stay open. Then you come here and click done. Now you can see there's a red line. Red line, it is here. Now what are we trying to determine here? The reason why gold choose to start buying here is because let's bring our vertical lines and horizontal lines. We want to see look at vertical line. You can see vertical line and horizontal line where they made a plus, where they meet from here. So it is this point here. You can see it is this point. Let me show you. This is the point here. Look at the cursor. Then when you come here, still this is this point is here. When we come back, when we come here, this point is here on top. So now, how do we determine that market is overselling and overbuying? Most of the traders, they consider that when the market reaches in 30, it is oversold. Market, when it reaches in 30, it is oversold. But sometimes the market can continue moving. That's why I choose to take what you call 10, level 10. That's why you can see, let me try to show you level 10. You can see market reached on level 10 once, and it reached it touched here on this level again in a previous price action. It then touch this point. You can see that it cannot exceed this point. Sometimes it can exceed it, but in normal market condition, it cannot exceed this point. So when you find that market has reached 30 and below, just know market is oversold. This is 27. So most of the time when you see like market is in level 30, it means it has overbought. Now here you come and choose to buy. For example, we can see this. Look here on this point. Look here on this point, and that point is this one. So market was overbought. So that's what started buying. So that's why if you use this indicator, you'll be able to determine that the market was overselling. So it is time to buy. How do we determine oversold? I mean, yes, oversold. Overbought. It is what we are done with what you call oversold. Then you're going to look at overbought. Now you can see, considering 4-hour time frame, you can see market have touched this level 90. So it means here market possibly it touched this level and tried to move down here from this level. After touching this level, this point 90, still you can see that the market managed to first move down to do some correction. After doing a correction, then buyers came in and pushed the market at this end. However much this market is selling now, is buying. Sometimes it can happen, you find this market, you can find it when it has started by selling because of this, because it has touched 90. But most of the time when we change to 90 to daily candle, you are going to see that market history. When you see on history, you are going to see that market is now on what we call a support level. This is a support level, because from here market was selling. Now here, this is a support. After creating a support, market did what? It started buying again. Now considering this history, however much it is overbuying, it is possible to find that this market will consider this history I have just showed you, and market continue to buy. So anything you do on the market, use a stop loss to avoid unnecessary losses and consider what you call risk management. So that's why we can see now our next target can be here. Now if you choose to start selling, we are going to have these targets. The first target will be this. Then after that point, we can have market can again come and touch this point the fourth time. But this is rarely, because after touching the third time, it means it's going to do what we call a long move. Let me delete this indicators because I'm done using them. So most of the time, if you see that a support or a resistance is confusing you, go and use these indicators to find out the momentum of bearish and bullish, and then you find what you call moving average, overall trend, then you find what you call overbought level and oversold. So I'm going to delete my indicators from the chart. So just click here, tick everything you want to delete, then still when you go to the chart, you're going to find that our indicators are no longer there. Now I've tried to explain you most of the things. I showed you how we can edit the charts, how to determine the direction of the market, overall trend, and then overbought, oversold, resistance. I told you resistance. For example, from here, this is a support. Market was moving down. It created here a support. It started buying. When it reached here, it created resistance. It started selling. So market always consider what you call resistance and support. Resistance and support. Now, these are what we call pivots. There's another thing that came into my mind. I can't live outside. Pivots. These are points where we determine where to put our exits and entries. So sometimes when you see market will be moving like this, when you see that the market have started rejecting the prices, what you call, if it is creating a lot of wicks, if it was selling and starts creating wicks on red candles, just buyers are now trying to control the market. What you call buying power is being accumulated. Sellers are losing control. For example, you can see here, remember this is a daily time frame. This is a daily time frame. So it means what we are seeing here, it is overall trend, overall market price. So these two candles are this. Market moved down. After moving down this week, it means after touching here, buyers came in and pushed this market up to this end. Then this candle was open. After opening, it started selling. After reaching here, buyers came in and pushed this market up to this end. Then this candle came and closed. Now this candle opened. It created what you call hammer, inverted hammer. It started buying up to this end. Sellers came in and pushed this market up to this end. It closed. Then this candle, and this is a doji. This is a doji. We shall start on those types of candle. This is a doji. It shows that sellers and buyers had the same control, because when this candle opened, buyers came in. After reaching this point, sellers pushed this market up this end. Then they pushed it up this end. Then again, buyers came in and closed that here. It means buyers and sellers are having the same control. Now, the bearish candle opened here. Then it said buyers first came in, then sellers joined the market and pushed that up and pushed it up to this end. After reaching here, then buyers came in and this candle was closed. After closing, this blue candle were created. After it was created, it first sold up to this end. It first created up to this end. Then buyers came in with a lot of energy and pushed the market. Then that's why you can see bull candles are following each other. But most of the time, when you are a day trader, you are a scalper, you can use like a 15-minute candle. 15-minute candle. So you can ask myself now, why did I choose to sell? Why did I choose to buy here? It is because of this. You can see here this trend, this market trend here with this 15-minute candle. Here, market was touching this point, trying to fail to break, and still failed to break on these wicks. You can see green wick, red candles. This is a wick, this is another wick, this is another wick. So sellers are failing to break here so that they can start pushing the market up this end. Again, this sharp candle entered. Now, when I saw that there's a green candle accumulating here, so I just knew that buying power is going to start because of these many candles of green. So that's why I choose to buy from here. There are many things we consider when we are buying. So this video, I trust you have learned a lot of things. However much the video is too long, but if you have given it time and watched it, just you are now you can do a lot on the chart. So if we use like 1 minute candle, you can see here market moved up here. After moving up, it created a support here. These are support, but these supports are very weak because these candles are the time frame I'm using, it is also weak. So if we want to get a very big move and you actually to be your signal to be accurate, you have to use like a 30-minute candle, 1 hour. So those are the candles you can use. Thank you for watching. Consider subscribing on this channel so that you cannot miss another interesting video like this one. I know if you are new to trading, I encourage you to go and visit our playlist for beginners. Playlist for beginners, it is on this channel. You go and click, learn how to create a demo, to create a trading account, how to use MT4, all features of MT4 and MT5. I explain them, so you can watch that playlist and learn how to start forex trading from scratch. From there, you're going to come for this intermediate tutorial. You cannot understand most of the things if you have not watched the other tutorials. So thank you much for watching this video. I request you please to subscribe on this channel so that when I post another interesting video like this one, you'll be notified and come to watch it again. Thank you very much. May God bless you.